Hey everyone, I'm Jeremy Szafron. This is Kitco News. Now, markets are reacting strongly after the recent 50 basis point rate cut by the Federal Reserve. Wall Street traders are betting that the Fed can manage a soft landing, pushing stocks to new all-time highs. Now, the S&P 500 surged on optimism, but there's still uncertainty as to whether or not this momentum can continue as the market digests the full impact of the Fed's move. Meanwhile, spot gold briefly passed that $2,600 U.S. mark before pulling back, showing investor uncertainty around the Fed's future rate decisions. And at the same time, the housing market is struggling, with existing home sales falling to a 10-month low due to an ongoing affordability challenges, despite lower mortgage rates. Well, not that lower. Joining me to break down all of this is Michele Schneider, Director of Trading Education and Research at Market Gauge. Michele, we spoke to you back in April. You made some correct calls on inflation, gold, silver. Welcome back to the show.
Thank you so much, Jerry. It's great, Jeremy. Sorry, it's great to be back.
Hey, we're talking about names. It's been for both of us, it's been a pretty wild week. Obviously, we had that FOMC decision come to us. We also saw the S&P 500 hit that new all-time high as traders are betting on this soft landing, as I mentioned. But there's also a question on whether this optimism is, sustainable here, Mish. So let's talk about this. How do you see today's market rally playing out, especially with the continued uncertainty around future Fed policy?
Well, I don't know if I would necessarily celebrate a soft landing, although it looks more obvious today than it did, say, a few days ago when people thought that if they went half a point, it was going to show fear and more signs that the Fed is looking at a recession. So clearly, we're not really seeing recession. But soft landing, let's talk about that because, I wear two hats. I wear the equities hat where I'm following along with the market and the particular sectors, and of course tech being one of them, but my economic modern family, which is the inside sectors, we'll get back to that, and my other hat, which of course is a commodities trader. And as you mentioned, thank you for mentioning, April, it was pretty obvious that we were going to see more upside in the metals. So the question is right now in terms of the soft landing, can this rally broaden out to different areas because interest rates are lower, which would be good for the classic ones that haven't done well as tech, like small caps, for example, the retail sector, and also transportation. And if that's the case, I think that at least the market looking forward about 6 months, it's saying we're going to see not necessarily the stagnation or even the recession, but more of a maybe sort of sideline growth as we enter a new administration. But at the same time, we're seeing a lot of the commodities take off too. And that's why I'm keeping my head into the stagflation camp for now.
Okay, stagflation, I hear you. Okay, well then let's break down Powell's comments. I mean, yesterday he was really trying to be careful about his wording, and he said, he's not setting a new pace, trying to make sure that the market doesn't expect another 50 basis point cut. But, that November meeting is coming up fairly soon here, Mish. And I mean, I'm curious, do you think investors might be overly optimistic here, or is this rally justified given the broader economic picture that you just talked about?
I don't know if he has to keep loosening at this point. I mean, there are many people out there who think one and done. For the year, that is, until after the election. That would certainly make some sense. I mean, some of the numbers that came out today, jobless claims are actually going down, so the labor market isn't as weak. You mentioned the housing starts, yet there's pockets of the housing market that has been actually very strong. The PCE, the CPI, the PPI, all the stuff that Powell likes to look at. This is where he was saying that he feels inflation has come down, still has to come down harder for him to really get more and more aggressive in terms of lowering. So when he talks about he's still going to be data dependent, that's him being very cool and collected and very non-committal. Yesterday was kind of a surprise to me. I thought we were going to go a quarter. So there you go. But
yeah, it was a surprise to many, I think. I mean, most banks, I think JP Morgan was the only one that called for 50 basis, and they were right.
And they were right. But the question is, does it really matter? I mean, what is going on right now? And I think we cannot lose fact of the debt, which is still high and climbing, government spending, which is still high and climbing, geopolitics, which has been also very volatile because it seems like things are calming down. Let's say Ukraine, Russia, and then you get Putin come out with threats of nuclear weapons, which I doubt, but still. And then you have the Middle East, where things look like maybe they're going to go to the table in terms of some kind of talks, negotiation. And then whammo, you get the pager debacle that happened. And now you have Iran being threatening again. And all of this, you put those three things together and you have a perfect trifecta of potential disaster, which means whatever Powell does won't really make a big impact going forward if those things get out of control. So we're not watching CPI, PPI, and PCE. We're watching DBA and DBC, which are two good commodity index tracking funds. And both of those look very interesting to us right now.
Okay, let's talk about that. I mean, I want to know why, because I was going to ask you, how do we cut through the noise? Like, where do you see opportunities for traders? Are there specific sectors, areas that we can still find the value in these all-time highs? Talk to me a little bit about what you're seeing there.
Okay, well, let's just start with DBA, DBC, and then we'll go into more equity oriented. So with DBA, that is really mainly agriculture. And if you look at a chart of that, you're going to see that it's really near the highs. It hasn't gotten through the highs yet, but it's had a tremendous move up as we keep hearing talk about disinflation. So you have to say to yourself, okay, yeah, pockets of disinflation, but really in terms of the agriculturals, not so much. And then one of my favorite barometers within that DBA is sugar. And because Brazil has had tremendous drought and then fires and a lot of the crops of sugar have gotten hurt, that has actually just made a massive rally. It's back over 22 cents a pound. And that to me, I really like to watch as an inflation indicator, because if sugar gets going, that impacts the price of everything, because sugar's in everything. It's a global staple, if you will. If we go to DBC, that's really more metal oriented and oil, right? So everybody got super negative in oil, but we still have OPEC plus to make decisions. Of course, as we just mentioned, the geopolitical situation. The lower interest rates is definitely good for oil. The United States didn't necessarily pack the SPR as much as they thought they were going to with the cheap prices. Now oil's back over WTI $71. That's still an X factor. And if we look at the metals, gold went to this point on a flight to safety, not because of inflation. So then you have to ask yourself, if any of these factors explode inflation, which I think all of them could, or at least some of them could, into another cycle, where does gold go? And then where does silver go in relation to gold? And silver, I think, has probably more potential upside at this point than even gold.
Interesting. Okay, well, we can break that open. Let's start with gold, because I've been hearing some analysts trying to figure out silver. It's the one that's hated. It's every time it gets a little bit of a bump in the price, it gets pulled back. But that happened to gold. I mean, it shot past 2,600 after the announcement, but then it pulled back after Powell made comments that he would remain data dependent and not commit to any aggressive cuts in the future. Likely, probably some selling of the news or taking some profits. In April, we had you on this show. You called for $3,000 gold going into maybe next year. We're well on our way today as we're sitting here looking at these highs. It's up 24% for the year. Are we going to see 3,000, and when?
I think it's extremely possible, and it may even go higher than that. Like I said, once gold stops being the flight to safety, the physical asset that central banks are buying. Actually, interestingly enough, I spoke to someone yesterday who works in physical gold. His family has been involved in that for 50 years. And he said that his customers are not interested in buying ETFs in gold or even gold futures. They want the physical. So there is definitely a movement there, a little bit doomsdayish, I will admit, if you start looking at accumulating gold bars, but nonetheless something to keep in mind. So yeah, gold can go parabolic. It hasn't. It's gone up. very steadily and very controlled. Silver, the silver to gold ratio, right? That's the big inflation indicator that those of us who are old enough to remember those days when that happened in 1980, silver has underperformed lately, but it looks like it's getting ready. It's over $31 right now. Really, basically, it's never broken down under 28 for a long time. When I say a long time, several months, in commodities, a long time could be 5 minutes, but in this case, it lasts several months. If it gets through this 31, 32, I think 38, that's where I start to see more of a parabolic move in the silver market, which of course will mean that will take the gold along with it, and probably copper and some of the industrial metals, which, by the way, we also have to mention GDX is near highs we haven't seen since 2021. The 2024 high in GDX was just around 40. It's trading real close to that as we're talking. And that's another one to watch. So you've got to say, can everything go up forever, equities and commodities? And the answer has to be no, because of, what we said, debt, spending, geopolitics, and all of that.
Yeah. To your point, I mean, specifically when we look at this election coming up, no one's really talking about this debt. Hopefully this, 0.5% on the basis price makes it a little bit easier for them to service the debt. Okay, I was talking to my family this morning. I was talking to my brothers, and they were, my brother was saying, wow, look at the markets. It's just ripping. Tech has obviously been a leader. But do you think that momentum can continue, with this Fed's more cautious tone here? Are you looking at industrials, even financials? I mean, bank stocks are doing well today.
Well, let's go to my economic modern family, of which, by the way, semiconductors is part of. I call it sister semiconductors because I've kind of created these characters to humanize them. And that is not necessarily, it's doing well, obviously, today with the rate cut and money pouring back into the market. And habitually now people, of course, are going to look at tech. And we cannot deny that the future of tech and chips and AI is the future. There's no doubt about that. But that doesn't necessarily mean that it has to be the lead sector right now. So if you look at the rest of the family, it's not. Interestingly enough, biotechnology, if we want to go tech, biotechnology, which has been a real sleeper for quite some time. If you look at just IBB or even XBI, but if we go with IBB, the fact that that's trading now over 150 is significant because that could really make a big move. So then you have to think, okay, what's the trickle effect of that? If you're getting companies like Eli Lilly, Novo Nordisk, Vertec, Amgen hasn't done as well, but some of the other big companies that are doing well, a lot of them are doing well because we're getting seasonally into vaccines. Yes, that's part of it. But a lot of them are doing well because of this whole diet drug craze. So when you ask me, what am I looking at for future trades? I'm really interested in the space of what happens to the consumers who are able now to do things they weren't able to do when they were suffering from long-term obesity. So skincare, look at AbbVie, that stock's done very well, which are injectables. People stop buying makeup and wearing better clothes, doing more athletic things. So I think that's going to be a really good area in terms of the consumer. I see a consumer shift to more I'm calling it the vanity trade. And the vanity trade,
the Ozempic trade.
The Ozempic trade, right. And incidentally, I think I saw yesterday that there was a company, I'm sorry, I should know the name of it, that is allowing you to get cosmetic surgery kind of like a buy now, pay later type of thing, like Affirm was doing. So can you imagine? I mean, so regardless of what happens in the market, I think that's a pocket that's going to stay really strong.
Yeah, there is something to be said about that, that spending. We've always been talking about these two consumers, the ones with capital and the ones without. Well, the ones with it are still buying business class seats and still getting surgery.
Yeah, and I've been saying that I know this is an edgy thing to say, but the lowest strata of the economic brackets don't really count into the equation of how the market is doing or even how the economy is doing, unfortunately, but it happens to be kind of true. So if you're going to look at credit card debt and things like that, that of course, then you can make a sort of a terrible picture. But if you're going to look at how much equity people have in their homes and how much money they're spending and how much money they've made in the stock market, then you can say, yeah, people are still going out and spending. I haven't seen any slowdown.
Yeah, it's been such a bifurcated market.
Yeah, so let's just go back to tech because you mentioned tech. So I like biotech as one, and I just explained that. I also, and I know this may not be the most popular opinion, but I do believe, regardless of who becomes president, that we definitely are going to go back more towards the alt energy and potentially go through second generation EV. And that's probably the more controversial part of the conversation because people, when I say that, they go, oh, no, EVs are done. No, they're not done. They're just adapting to the megatrend status that they're at. And obviously, China is, kicking our butt in the EV space because they have lower costs. They have most of the labor being done now through automated means. And we're struggling here in this country. We spend a lot of money. The infrastructure is not right. The prices are still high. The government incentives added obviously to the spending, but not necessarily to the purchases. But that's changing now. EV used markets starting to pick up over gas cars. Some of the costs are coming down. Tesla stock today is back over 240. So I think when you look at tech, yeah, AI, great. But I think there's room for these other areas, biotech and then alternative energy. And all of this, by the way, with commodities is needed for AI. So, we can't lose sight of that. And the consumer. So that's what I'm watching for 2025.
Yeah. There'll be a lot of audience members going, what? I thought that the EV didn't have any breath anymore. I mean, we've seen some of the car companies obviously give up hopes, but you're thinking this could be a second round. And if they do the second round, maybe they'll, nail this one or at least get it a little bit more into the mainstream than the last time.
Well, the infrastructure is huge and the battery technology is huge. And Tesla is doing what they can to help companies like General Motors, offering them what they need to get them going. And then some of the, some of the companies like Lucid, for example, the design of their car is so cool. And yeah, so Tesla obviously is the name that everybody recognizes, but we're watching the little companies like Rivian and Lucid to see what happens, the more American companies. And of course, there'll be the whole tariff conversation, but we can save that for another time. We're going to have
to. I mean, obviously, we got lots to get into. We'll have to have a conversation post-election and see how this broke down. But before I let you go, Mish, we got to talk Bitcoin for a minute. I mean, it's climbed to a 3-year. I wish it had climbed to a 3-year, but it's climbed to a 3-week high alongside global equities, obviously following that 50 basis point cut. But, Bitcoin's rise is often linked to looser monetary policy. Do you think that the current market is setting up Bitcoin here for more sustained gains? Where are we?
Well, actually, we were starting to see Bitcoin not at decoupling because that would be way exaggerating here. But we started to see while semiconductors in particular, which was very much affected by risk off factors, we started to see that hold around the 57, 58,000 in Bitcoin, and it never broke down, especially under the weekly charts, although people were getting very negative at that point. So now that we're up at 62, 63 with a more risk on environment, and what happened with the Fed, yeah, this could definitely set the stage. I still think at some point, Bitcoin will be even more popular than gold, but that maybe we're looking 10 years down the road. But I'm very bullish in Bitcoin. We've been buying not just Bitcoin, but we've been buying some of the other, blockchain technology. We have a big position in that for our clients. Block, BLOK. Personally, I'm in Chainlink. I'm in Dogecoin. I'm in XRP. We're talking about an ETF for that, which is Ripple. That would be amazing. So yeah, I'm very bullish the space here. And I think dips are actually buy opportunities.
Yeah, a lot of people buying the dip. Good strategy to do it. Okay, I got one more minute here, and I just want to talk about it because we brought up briefly those existing home sales. They dropped to that 10-month low, even though mortgage rates are starting to come down. I mean, Powell acknowledged that the housing market is frozen due to a lack of inventory. Is there any way for traders to play this environment, or are there specific areas within the housing or even, I don't know, home builders or REITs where, there's some opportunity to make money right now?
A lot of people are talking about opportunities in REITs right now with the rates coming down, and that's certainly a factor. Zillow, for example, also that stock has been basically bottoming and starting to move up. SLG, which is a big real estate company, huge real estate company stock, that also has been doing well. So you can look at those areas. But on top of that, I instead of playing those specific stocks, what I'm really doing is I'm looking at it, especially since people were talking about, when you have these kind of rate cuts, the last time was 2008, and then we had the big crash. Well, no, that was Lehman Brothers going down and a big mortgage debacle. We don't have that right now. So I think it only means economically a positive in a short inventory of housing, nuanced market for sure. Housing starts went way up actually earlier in the week. So, it's a confusing area. And so I think people would be better off sticking with the areas that seem a little bit more sure-footed. Transportation, by the way, we didn't even mention that. FedEx reports today, but that is actually on new 52-week highs. Like I said, look at the aspects of the retail sector. Look at some of the alternative energy plays like TAN, and then stick with the small caps and maybe even the regional banks to see if this helps them, like I say, broaden out, considering how underperforming they were versus the technology sector, the classic technology sector.
Yeah, of course. And then, of course, monetary policy, it does take a minute to trickle down to the actual consumers out there. So maybe Mish will come back in 6 months and this is a different story. Michele Schneider, Director of Trading Education and Research at Market Gauge, joining us today. Thanks for making the time, Mish. Always appreciate it, and look forward to having you on soon.
Thanks so much, Jeremy. It was such a pleasure to talk to you. See you again.
Always a pleasure. Thank you. I'm Jeremy Szafron for all of us here at Kitco News. Thank you for watching. We got great content all week long. Don't forget to subscribe, hit that notification button, and we'll see you next time.